Hello guys, hope everything is good for you today. So for today I have changed the time from 11 p.m. to 9 p.m. just to let other guys who can't attend, and I tried to change the time to see if other guys can come because they can't because of their time schedule. Okay, so the subject of today is how to invest in IPOs or how to trade them. It's always very important to know some characteristics that we will speak today. Okay, so we can say how to invest and trade IPOs, since for me I'm always doing what you call swing trading, which is short-term trading. So so I will be waiting for some guys to come, and then we can begin directly and to see major things. Okay, so we will see okay, so as I can see, hello Wondi Casa, hello, how are you? And Chris de Guzman, good evening, how are you? So I changed the time for today. Okay, so hope it fits your schedule. So we are just at the beginning, and okay, sorry guys, I'm just trying to wait for some guys to come, and then we can deal with the subject of today. So how are you doing for tonight? As you can see, the market, it means when we say the market, it means the whole indexes, they were doing like bad this week. But the good things is there are some stocks that are going up and they do great in this week, although the whole market is doing bad. And this is always what I tell you guys, that always try not always to think that if the market is bad, that means that all the stocks are doing bad, and this is a mistake. Okay, so I will be just waiting for a few minutes. If there is no other guys, we will begin our chat. Hope the notifications goes on the right moment for all you guys. Okay. 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 So if you have some questions, please ask well, we are waiting for some guys to come. So if you have some questions, please just ask. We are waiting for some guys to come, and then we can begin straightforward. Okay. Hello, Bin Nguyen. Now he said, what do you think about Facebook? Now, Facebook, it began in 2012, okay, as an IPO. And then around 6 months or 7 months, it has been going down, okay, because analysts were against. Because they say it can't succeed. Google is better than Facebook because they try to, what we call this is what we call they compete about business ad, which is the most lucrative business in the world, because Google, all his money is from ad business. Now Facebook comes to do what? It's just to compete with Google, because they have the same. They don't have the same model, but they have the same business. It's the business model. So when you say to me, what do you think about it? Now, you are like Bin Nguyen. I know you don't know me. Maybe you know me recently, but from 2012, I always buy Facebook. But for me, as you might know, I was just buying Facebook as following the trends of Facebook, but I didn't invest. It means I didn't put money at the time. At the time, when I say it was a successful IPO, it's when the stock was 1999. That time I bought it in my other trends, because whenever there is a trend, I am in, because I am following very good what we call Facebook and Twitter, Apple, all these kind of stocks that I like, and I follow too much. Okay, so what do you think the future? You know, the future, if you want to, for example, to see an IPO, to see a company, try to see year by year what it is doing in terms of earnings, in terms of money, because this is the most important thing. Okay, is it getting more money or is it getting less money? Almost all companies who are good at competition, they can make a lot of growth, and the stock later they will be appreciated, and you see the prices going up. But for an investment, you should decide by yourself. No one will tell you that this is good, this is bad, because for you, it is a lifetime investment. For example, if you invest for Facebook for 5 years, 10 years, 20 years, no one knows. No one knows what will happen in the future. Maybe there is another company that it is doing like Facebook and becomes better than Facebook in social media, or so we don't know. So if you want to take a decision, first, if you want to invest, you should have some criteria to rely on. Criteria, it means why you want this company to buy and not another one. If they are, for example, in the same industry. Okay? Because try not to see what the people say about investment for the long run. Why is that? Because let's say you put all your money, and it is a false thing, because the risk is very high. What if you buy the stock at 150 or 70, and then after 2 years or 3 years it's going down, and this company is losing money? Okay, so understand that you should understand the risk that you are going to do, because the people, they like when they see the history, they begin to it means say something about the thing in the past. But for me, if you follow my videos from 2012, I was with Facebook. That's why I traded a lot. But I trade, okay? I follow trends. So for me, I didn't invest. Because understand when we say invest, it means you lock your money into ups and downs of the market. For me, I don't like this idea of holding when the stock is losing money. That's why I do trading. That's why I don't do investing. Okay, but investors, if you want to be Nguyen, if you want to be investor, you should diversify your companies. You put some money and you follow them. Okay, if they are successful, you stay. This is the good idea. It's very simple. You see, you buy at $10. Next year it is 15. The other year it is 20. The other year it is 30, 40, 50. So you are making money. No one will tell you that you are wrong because you are making money. Okay, so that is for Facebook. Now let me drink some coffee before continuing to Wandy Casa. He has another question. So Wandy Casa said, I think the market will run on Monday. How about you? Now listen, the market has been doing so bad, and I have explained this into the chart. So before I go to Albert's Sadijian, he say, hi Karim, what do you think about Dropbox IPO? We will see that after. So let's go and see the market. For you guys, just have a few time. I will explain the situation right now about the Dow Jones. It means in general, because you should understand that when we say Dow Jones, we are speaking only about 30 stocks, but since they are very, very big companies, they represent the whole market. Although they are not the whole market, but they represent it. And you see that the Dow Jones is diversified. You find banks, you find technology, you find a lot of stuff. So that's why Dow Jones is good to look at. Okay, let's for a few minutes, let's go and check the chart. Okay, so see, this is the chart. Now, this is the beginning of February. Now, I have been, see the trend. there is a small correction. It stops here. Then there is another trend. When I say the trend has stopped, it may go up into a trend. It goes into a trend. Then this trend collapses. Then another small trend goes up. But this trend here, it goes so bad. So we are going into to see the support line for the whole correction. This is the correction. This is the support line. Now, if the market continues and crosses, believe it or not, we will go to another correction. And if we go to another correction, because the market has not gone and go above the resistance line that you see here. Here I'm just saying from February. Here February. Here no, January 29. Okay. Let's say here is, because I'm following. Okay, where is the 1st of February? Yes, this is 1st of February. But for me, I began with this because the correction begins here. Okay. So all what you see here is trending into a range. This is the range. Resistance line, support line. Goes down, goes up, goes down, goes up, goes down. But if you tell me, for example, next week it will be going up, for me, I don't trade like that. I don't trade because I predict. Okay? So prediction, understand what does it mean, prediction? Prediction, it doesn't rely on facts. It relies on hopes. For example, you have some stock is going down, you lose money, and you think, oh, okay, I think that the stock will go up. Because you are thinking about your money that you have lost, but you are not thinking about the facts. The fact is, the market has gone down for the whole week and so bad. If it continues like this, it could be another correction. So for me, as I see it, I see signals. Now, right now, I don't see any signal. That's why I don't tell you if the market will go up or go down. We will see next week. But believe me, next week, it will show you. Either it crosses, it goes down, or it has a reverse and it goes up very, very strong. Because see, what you see here, it is the whole more than week. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it is 2 weeks. 2 weeks going down. If it continues with the third week, it will cross. Now, why always when I say to you support and resist line and I try to emphasize? Because any trader, almost all the traders use resistance line and support line to trade. Either day traders or swing traders or whatever. Here I'm not speaking about investing. Okay? So hope you understand that. So if we continue with the same thing, so we will have another correction. And if this correction continues, it will be considered as a crash. Okay? So that's the thing that I always speak about. Okay, this is the major thing I'm saying. Now let's go to the other question of Alborz Sajidian. He say, "Hi Karim, what do you think about the Dropbox IPO?" Okay, now I'm saying something very general about IPOs. Okay, so there is 2 things you should understand. The one thing is the company itself. Is this company making money? And the analysts, most of the analysts have a good impression about this company. Because the analysts, when they go to a company, they see whether this company can stay in the market. It means it's any company like this Dropbox IPO, okay? They will see if it continues in the business for 5 or 10 years and it can compete other businesses, okay? This is what it does. So I will try to see. I don't know the symbol. I will check in the chart. And see if I can get it. Oh, it is. Oh, okay. So it is this IPO. Is it only for today? Okay. Now let's go to it, guys, and we try to check it. Now, as you can see, DBX. This is Dropbox. It began today. So let's see. The open was $29, and it goes down to $28.48. Okay, but the high was 31, and the low was 27.84. Okay, so the first day it lost 52 cents. Now, how about the future? So for the future, no one knows. Okay, so it is all depend on how the traders will or the investors will like it or not. Okay, so this thing is only a general thing. Okay, so if you, for example, you want to gamble, okay, you want just to gamble. An IPO comes, you buy it. But in general, most of the IPOs, they go down. Most of them, but not all of them. Okay, this is just an idea that I give you. If you go and check the IPOs in 1 month or 2 months or 6 months, most of them, they go down. But there are a lot that they go up again. It means they go down and then they go up. And sometimes some IPOs go up and continue to go up for a long time. So in general, if I am trying to explain this to you, no one knows. Okay? For me, for example, I will stay. Hello, Wiseman. For me, do you know what I do in this IPO the first day? I always go long. What does it mean? It means because there is a lot of people want to buy, you should buy at the beginning. Okay? As I just showed you, so here Johan said, but the Dropbox offering price was 21. No, don't forget about forget about the offering price and the other stuff. This is something before the market comes. The market, what is the market? It means it is the people who push the price to go up or down. Okay, not the company, not the banks, what they offer as the beginning. So don't worry about this, because you didn't buy at 21. Okay, here I just explained to you this, Johan, to understand. Okay, so let's say, okay, let's say here. So this Dropbox, you say it is here. It is $21. This is what they offer. Okay? But the first price here is 29. It opens with 29. From 29 it goes to 31. Let's see here if it is true. 31.60. 31.60, it goes up, and then it goes from 31, it goes down to let's see here, to 27.84, 27.84, and then it closed at 28.48. Okay, 28.48. This is the close of today. This is the close. So this price is before the trading day. This is the real market. This is the real market. Some people here, they have bought it at 21. Yes. If I tell you something, maybe you will not. You will be disappointed. There are some people who buy here before the market. It means before the stock market opens. Now these guys, who are they? Now if you are rich, they can give you this price, which is 21. Okay, but since you are not rich, you are poor like the other here, you should buy from the market. And I have always explained this in some of the thing, in some of my explanations. Okay, in some of my explanation, I explain this. I will get to you. IPOs, there are hundreds IPOs each year, each day, 2 days, 3 days. There are a lot of IPOs. Okay, if you have money, okay, you can ask your broker and you say to him, I am looking to buy this IPO before the market, so do you have some shares to me? So if this broker has, because the company or the banks that underwrite the company, they should sell big chunks of the stock before even the market opens. Okay, now the broker always, he wants big guys. They have money. He doesn't want, he wants to make his money very quick. He doesn't want, oh, okay, I need 100 shares, about $21 right now. Okay, he will not give you this 120 shares or 200 shares or maybe 1,000 shares. He will not give it to you. First, because if you don't have millions of dollars in your account, the possibility are he will not sell to you. Okay, so you should ask your broker if you are interested to buy IPOs before. So you should ask your brokers if there is a possibility to buy. And for example, the IPOs, okay, there are hundreds each year. If you go to, for example, Yahoo calendar of IPOs, he will show you by day how many companies. And you can buy, but there is no a sure thing, because all the people, why they want to buy before, they think if they buy before they can make money, but you can buy by 21 and the market goes down to $6 or $1. Okay, so you will lose a lot of money. So this is about, if you know the company before, you know that this company is stable and it has a lot of and it is successful in the market, and you want to buy it for a long term, like 2 years, 5 years, 10 years, because you know the company. This is good. But if you don't know the company, it is just a company, okay, that you don't know the financial statement. So it will be a very big problem. Okay, so let's go to Alberts. He say, why you mostly focus on following uptrends by going long and not also follow downtrends by selling short? Yes, this is a good question. Selling short, first, there is unlimited risk. And I will explain. Limited risk, what does it mean? Unlimited risk, it means if the stock is going up and you can't buy your shares, the shares will be going up and you buy them with the high price if you lose. Now, you hear, for example, Alberts, you hear, for example, big guys like, for example, John Soros. I will just because you ask this question, I will just show you some examples. Okay, some examples. But the thing is, if you are looking at big, for example, hedge fund, what they do is that they have money, and this money, it is not theirs, and he can cover any loss because he has billions of dollars in his hands, or let's say millions of his hands. So here how it works. For example, for let's say George Soros, who is a hedge fund, he go long with some stocks, and he sell short some stocks. I will show you how this thing work. Okay. Okay. So let's say here there are a stock that it is going down. This is a downtrend. Okay, the stock was let's say $20. Now it is $2.30. Okay, now you, for example, you see that the stock is going down and you get interested to buy it at 2. Now when you buy it at 2, okay, there is a big guy for this company, either a hedge fund or for example, there are good news about this company, and you will see a gap up here at $25. Just an example, okay? I'm just giving you an example to understand the risk. If you bought it at 2, let's say you think that the company will continue to go down, okay? And then we have what we call a gap up. Just an example, okay? A gap up. Do you understand how much money you owe to your broker? I think you don't understand this thing. That's why I want to make sure this. From $2.30, let's say you bought $5,000 of this stock. It could be 10,000, it could be 20,000. Now, if the stock was $2.30 and it goes to 25, just because there is news, there is a good news for this company, or let's say Warren Buffett, for example, Warren Buffett, who is the most famous people, say I may buy. He say I may. He didn't buy yet, and he will never buy. But he say I may buy this company because it is good. Do you understand? This guy, if he said it is good, what the day traders are doing? They go and they, after the market close, they will buy $2.30 until it goes to 25. The next morning you find it 25. So let's say it is $2, just to make it clear. So $2 to 25. Let's say it is 26 to make it clear. It is okay. So how much will be your loss? Okay, so 5 and 5, 13 times. Okay, now 13 times, it means this $5,000, you multiply by 13 times. Okay, so it's 15, 5, 1, 6, and 2. What does it mean? That you have lost $65,000. Now, even if it go higher and higher, you should buy them by 25, and this, your broker will send you a margin call. Okay, he sends you a margin call, and he asks you $65,000 as a loss. He asks you, because $5 it is yours, so he asks you $60,000. So I understand that some people, when they do trading, they ignore the risk, and they see that the market will go with them as they like. Now, gap apps, and especially gap apps, especially penny stocks, that you think you are going in swing trading. That's why for me, because the risk is unlimited. Unlimited, it means you will never know how much you lose. That's why I don't do. Okay? That's why I don't do selling short for swing trading. I can do selling short for the day. Okay? But I don't do selling short a lot. Because I always find stocks that go long. Let's say, I give you an example. I know you say, oh, how is that possible? Okay. Last week, when I do my weekly search, just I bring them 4 stocks. By the search, 3 of them have gone good this week. One is 10%, one is 5%, one is 2%. Although, you see that the whole market is doing bad for 2 weeks, but still we are making money. Although, it's the opposite direction of the whole market. So understand that selling short for swing trading, it is a real big risky business. Don't follow, for example, those hedge funds, because those hedge funds, they have a lot of money and they know a lot about these companies. If he sees that these companies are losing money and he knew that these companies, he can hire some people to check for this company if the fundamentals are good or bad, and he can bet on them. He just bet, because there is no stop loss. They don't use a stop loss in when they go long for many years, because George Soros, he can go 1 year, 2 years, 5 years in a company until he got so much money, either up or down, and then he sell it. So these guys have a lot of things that we don't have. We don't have money. You don't have money because if one company, you get a big loss, like a gap up, you are going down, and then you have a gap up, what will happen to you? All your profits will be gone in other stocks that you are going long. That's why I don't play with unlimited risk. This are boards. If you understand just this thing, you will make good results in your life. Okay? So try to think about, for example, Warren Buffett. Why he doesn't do shorting? Because he thinks about the long run. This is what we call investing. You can do also shorting, but understand that the risk is big. Now, let's go to shorting the whole market, which is so different from what we call selling short. Shorting the whole market is only using ETFs, and this is in my training level 18. How to short the whole market. It means you short a sector, you short an index, but it's not selling short. It's not you borrow shares and you sell short. Another thing is that you should understand, our boards, is interest rate. If they ask you 5% or 6% or 10% interest rate in order to give you the money, so this is a very big spending. The broker doesn't care if you make money or you lose, but at the end you should give him this 6% for each day. And how do they calculate it? They calculate it like a mortgage. So it will be a lot of trouble for you. That's why for me, I stay away from the big fluctuations of my account. My account is going steadily very good. During the year, it's going up. But I don't want that I grow up for 2 months and then 1 month I lose everything. This is a stupid thing that I shouldn't do. Okay? Let's drink some coffee. So let's go to Wendy Casa. Before we want to go Wendy Casa, Johan said to me, thank you for the explanation. Thank you, Johan. Please stay with us. Ask as much as questions as you like. And if in the future you need private questions, you can send me an email, or you check my my first training level, which is free. So just see the video here and see in the description, you see my email and my website. Now let's go to a question of Wanda Cassie. He said, what is the best chart website setup for traders? Now, what do you mean by setup? What do you mean by setup? Do you mean how you just to how to just to set up your chart? This is what you're looking for, or are you looking for? It means how to trade. It means how to get a signal. If you want to know how to get a signal, please, you should either do my subscription, silver or golden subscription, and it will teach you everything about how to search for stocks by stock screener and how to find the stocks by the chart. So Wanda, you should tell me what is your question. Is it about just the setup? There is a training, a free training. You can check my my description here on the under the video. You will find a training. You will find a training about the free chart, which I use. This is for USA and Canada and Canadian people only. The chart is only for US. It's only for US citizens and for Canada stocks. Okay, it's not for international stocks. Now, Albert says, before I speak with Albert's suggestion, hello JJ, how are you? And he say, I am glad you are starting early now. No, see, I just want to change the time and see if other people are interested that they can't because it's too late at 11. Some people, they can't come at 11 because maybe they are working on Sunday. So that's why I use Saturday because I know most of the people, they don't work Saturday and Sunday. That's it. But we can change the time as whatever is good for my traders and more for the investors. Now let's go to Albert's and we see the question. If the market crashes or goes to a big correction, is it right to predict some companies who have gone so fast, like NVDA, will hurt the most? You should, if you are, see, if you are going to sell short some companies and you see that the market has been going up into a more correction, it's up to you. But I have just explained that for me, I'm not going, most of the time, I'm not going to sell short a company. But what I do is, Alberts, I will short the whole index or the whole sector. Okay? This is better because you get the average. And there is no big fluctuations. Because a company, it can go down 20 points, 30 points, and then you can see a gap up, or you can see something strange in the market. So for you, you short NVDA or another company, it doesn't matter what you short. The most important thing, understand that selling short is a risky business. You should at least have training. If you, for example, Albert, you want to sell short, at least you can get my training, which is training at level 11, how to sell short a stock. At least you will see the risks that it is associated with selling short. Understand that it is a big deal. The loss is limited. Okay, if it's not like if there is a gap up and you are shorting a stock, it will be a very bad thing. But it's up to you. But understand that you can lose all your money, and you can lose more if there is a gap up. Try to think about it. Okay, let's see NVDA. Let's see in the chart how it looks like. NVDA. Okay. So let's say I will just show you. Okay. See. The NVDA first, it didn't lose as much as, it didn't lose that much. So let's say you come here on today, let's say yesterday, Friday. What if you buy it, you sell short here, and there is good news on Monday for this company in electronics, a good news, and from 232 it goes 270 or 300. Okay, so I will try just to make it clear here. 232. Okay, so here is the resistance line. Here is your stock, NVDA. It goes up, it touches this resistance line, and now these 2 days it goes down. Now, what if this 232, this is on Friday, what if the market has been so good on Monday, and from through 232 you find it $300 in the morning here, and this is a gap up. Now, when I say this is a risk that you don't know. This is a risk that it is called unlimited risk. Unlimited risk, you don't know where the stock will go up. You don't know how much it will go up. Okay? Because you can't calculate it. You can't calculate this. This is a real problem. So the risk is unlimited. And maybe I'm telling you the truth. I'm telling you the truth. Alberts, you might go to some guys online, or you go to TV, and you see some gurus, and they begin telling you Oh, just go and short it. Short it. Short the hell of this company. Short all of this. You understand that you go and short, you don't know what's going on, and the next Monday you find there is a gap up. Believe it or not, all your profits of the year you will be deleted. I have seen some people who are crying because they do things and they don't think about the risk. For me, the basic thing of my strong strategies is based on a solid risk management. Okay? I don't play with my money. I don't want to give all my profits for a crazy trade that I do. That's why I don't want to mess with the market and do crazy trading. So you should understand this. All my strategies is based on good risk management. If you do the same as me, most of the time you will not lose money. Okay? It's the opposite. You are making money. But yes, you could make good money, you can make less money, but the main idea is that you are not going to be with the 95% of losers. You should be going to the 5% that always in the stock market we are talking about them. People who understand the risk, they can continue trading for the whole life and they can make money. Okay? Those people who don't understand risk, they do crazy trades. If you were with me last week when we do live session, someone has lost 90% of his money, okay, in an ETF that he doesn't understand what it does. Okay, he doesn't understand. And when I see the ETF, I see that it tripled the loss or the profits. He likes risk too much. But the problem is that the first thing he has done, which is bad, I told him, is that he doesn't divide his account into positions. If you have not done this, you should go to your account and divide it. There is training level 8, how to minimize risk and how to maximize profits. It shows you what you should do in your account. If you get the training and you still don't understand, you can send me an email, private email, and I will teach you how to do these positions according to your risk and according to your plans. This is the first thing you do. But this guy has put all his money in one stock. And I told you hundreds of times, never put all your money into one stock thinking that it is a sure trade. So this is so important. And this thing I am teaching, I always repeat, but some people, they don't understand. And they think that when I say, oh, just divide this or do this, they think that this is just something, it's not important. And it's not. But when they get the problem, they can't fix it. When you lose 90% of your money, you have 10,000. You lose 9,000 in one trade. How can you continue trading in the future? And you tell me, oh, I am broke, and it's your problem because you do stupid things. So I am here to correct your mistakes in the future. You will never do this kind of mistakes. So let's continue with other students. Trump said, can you use industry indexes for IPOs? No, Trump. This weekend, I have done a search for IPOs. There are some IPOs. For me, I have the same criteria. You should understand that if you want to find stocks, because all these companies are called, most of the companies are IPOs. For example, 1 year, 5 years, 10 years, 20 years, 25 years. All these are called IPOs because it is just, they just go to the stock market, and they will stay for long if these businesses are good. So for you, Trump, I told you many times, I know you are a stubborn guy, but I told you, I have a search criteria that if you use, you will see how to search for IPOs. Either this quarter or last year or 5 years or 10 years, there are ways by my strategy to find these kind of stocks. So either since maybe you have training level 1, which is free, either you buy 2 and 3 and 4, you get everything, or you can do the subscription, silver subscription. Just try it. It will take all your questions out. It means you will know what you are doing in terms of searching for stocks. IPOs or not IPOs. You say industry, yes. This is training level 3. Okay? Training level 3. How to search for stocks using an industry index. It's the same. But when you say IPO, IPOs are new companies, but new companies, how long? Is it 1 month, 1 week, 1 year, 5 years, 10 years, 20 years? All these are called IPOs. So you should find, for us, when we search, we try to search all the IPOs, whatever their age. 1 year, 10 year, 20 year, it doesn't matter. For us, is this IPO is making money, is it going up? We buy it according to our signal, according to our criteria. Okay? So Trump, what if all industries are going down? Which stock to buy? Yes, you are asking the same question. If all the industries are going down, it doesn't mean that there are not stocks that go up. And this is by my search. To find them is by my search. For example, this weekend, it means on Friday, I have made a search. I find nearly 30 stocks that are IPOs. Now, these 30 stocks, they are going up, although the whole market is going down. You see that? This is how we search. And it is a very simple thing. It needs only, you do the search, you practice until you master the search. This is the first thing you can do in my strategies, is you master the search. Another Wandi Casa say, thank you very much, welcome. I'm trying to do my best. Trump said, Facebook went down too much. Is those allegations are true, or they want to get cheap for earnings? Your opinion appreciated. So they want to get cheap for earnings. No, earnings has nothing to do with what you say. And allegations, which allegations? Because for me, understand Trump, I am not following news. For me, I see the price. I don't care about the news that you are following. Because if you can make money from the news, you just follow the news, and that's, if it is good news, you stay. If it is bad news, you sell short, and you continue with that. For me, I don't follow news. But Facebook has gone down like the other stocks. All major stocks have been going down, but not all of them. Okay, not all of them. So your job is to find those that are good in the market to buy and leave the others. Or if the market is going all bad, you can short the whole market. For me, next week, if the market is going so bad, I will try to use training level 18 and I will short the whole indexes or sectors or industries. I just find some and I buy them, and then I will wait for 1 week or 2 or 3. If those industries or the market going down, I will be making money. That's as simple as that. But I don't sell short. Understand that I will not do it. So for Facebook, for Apple, for any stock, all are going down. So it's not related mostly to allegations or what you are learning or what you are reading. Because if you want to watch the news, you will be confused. Do you know how many stocks are in the stock market? Do you know how many ETFs, it means ETFs, stocks in the market? Mutual funds? There are thousands. How can you follow all this news? You get confused and you will never know what you are doing. That's why the best thing is to go and do trading as a swing trading. You follow trends. If something is good, you buy. It goes up, you make your money, then you sell. Now, Juan de Casa said, how about put options instead of selling short during market sell-off? Now, Juan de Casa, it's very good that you bring this up, which is puts. I will just explain this. Rahmatullah, thank you very much. How are you? So let's go and check puts. Okay. So let's go and check puts. Now, I just before we begin, I just give you a general idea about options. Okay. So let's say here is the stock right now. It's $20. Just an example. Now the stock can go up or it can go down. Okay, and this is the price that you bought with. Now, if you think that the market is going up, you can buy what we call calls. If the market is going down, you can buy what we call puts. This is just a general thing about options. Okay, about options. Now let's say the stock is $20. Now if you want to buy 100 shares, you will need $2,000. Okay? But if you want to buy in the other side, if you want to buy a call, let's say it will cost you only $200. Now, if the market is going up, you can make money, and this 200, okay, that you bought, if this $20 is going up, because the calls follow the stock price. If it's going up, you can make money. Now let's say it's the opposite. Okay, it's $2,000 here, and it is $200 you bought this puts. Okay, if the market is going down, you will be making money. Okay, this is the real thing about options. But why, you ask yourself, this is the question before I answer. Okay, this is the question. Why Wall Street guys have created options? Do you understand why? Because it is a product. An option, it is just virtual. It has nothing inside. Okay? It has nothing. It means it doesn't represent something. But it relies on the asset, which is the stock. It could be bonds, it could be stocks, it could be currency, it could be anything. But let's say, because we are speaking about stocks, Let's say we continue with the stocks. Okay? Why they set it so cheap? Have you ever thought why the options are cheap? Because maybe, I know maybe you have ideas, but for me, I will try to make sure you understand Wall Street guys, how they make money from what we call options. So now $200, it is so cheap because your risk is, all this money is your risk. It's $200, so you are risking 100% of your money. Okay, let's say you bought it at $20, you bought a call at $200, and let's say the stock has been going down. What does it mean? These $200 can disappear very quick. It doesn't disappear like $1, like $20 here, it goes $1 down, here it goes $1 down. No, it can go here $10 or $20 or $30 down, because the calculations, how options are calculated, it is not the same as the dollar going up or going down in terms of a price. It doesn't mean that when the stock goes up $1, you are getting here $1. You can get here $10 or $20 depending on the option itself. So understand that your risk is $100. Let's say I give you an example. Okay, another example. When you see $200 when you bought one call, okay, you bought one call, but you have $10,000 in your account. So you begin to say to yourself, I buy only one call. What if I buy 5 calls? 5. Now 5 calls will be $1,000. So understand, okay? Understand the terms of risk. You buy 5 calls. Okay? Some people, they don't buy 5 calls. They buy, let's say 5. By 5, they buy 25 calls. Okay? So 25, it's okay. Let's do here 25 calls, and there's here 50 calls. Okay, this is 5,000, and this is 10,000. This is your money. Understand? Don't say that the people they don't buy 50 calls. Some people they buy 100, 200, whatever calls they want. So here is the problem. Let's say you buy one call today and there is bad news in the company and there is a gap down. Okay? A gap down. There is something bad in this company or in the market. Now understand that this $200, since you have 100% risk, there will be only time which is left for your money. Let's say it is $10 or $5 or $10. In the next morning, from $200, let's say you find $15. Because the gap down, it's all your money. What is left is just the time of this strike. Because the time, for example, it is 1 month strike, 1 month. Just an example, okay? Now, let's say you buy 5, and then, just an example, okay? You find, for example, $80 left, or 5,000, and you find, for example, 800. Just an example, okay? or 10,000 and you find 1,500. Now this is what will happen to your money if you play a lot with options without knowing the risk, because in options the risk is 100%, and this is why the people, if you are going to do options, you should understand the risk too well, because if you don't understand risk and how this options work, you will be losing money. Don't say I always do 200, because people, you say 200 and you have $10,000, you begin to become like you want more. Let's say one time you buy $200 and it is good, and there is, let's say, a gap up and you make, let's say, $400, the opposite thing. Or this 1,000, it becomes $2,000. Just an example, okay? It becomes $2,000. Here it becomes $400. Here it becomes $10,000. Here it becomes, let's say, $20,000. Sometimes, yes. The cause, if you are right, it will bring you a lot of money. But the problem, the risk is 100%. If you lose, you lose everything. Okay? So this is just, I want you to understand before we continue. So I hope Wendy Casa understand this option thing, because when you do options, you are risking more money because your risk is 100%. Okay? So there is nothing that it is a guarantee you make money. There is nothing such this. That's why a lot of people, they lose money, because they want a guarantee in the market. That's why some people, they ask, oh, what do you think about Facebook? What do you think about NVDA? Can it go up? Can it go down? No one knows. Because we are working, for example, you tell me, how do you work? For me, I work by probabilities. I don't work by sure thing. I have never expected money from the market. What I expect is a loss according to my risk. If I get money, it's okay. If I don't get money, I get a loss. It should be small loss. But if I put all my money into options and there is a bad day, a gap down in all the market, and it's so troubled, do you know that you lose all your money in one night, in one day or two? This is what the other guy has done last week. He put all his money into an ETF that he doesn't know what it is doing and how it works. Because ETFs, you should always see what it does, what it attracts. That's the thing. That's why if you go to, for example, to my training level 18, how to short the whole market, it gives you some ideas how to search for each ETF that you want to buy. Okay, so let's drink some coffee. So let's go to another question about no place like New York City. Yes, New York is very good, but there are other places that are also good, man. So he said, oh no, let's go to Trump first, because he asked it first. Why you don't read company news? Is the media scam? Okay, this is a good question. Okay, why you don't read company news? Is the media scam? The media, it gives you the news, but in terms of trading, the traders, you don't know what they do. Okay, I will, Trump, since you asked this, it is a very deep question. The media is not a scam. The media is just, they give you the news. Okay, let's go and explain this. Okay? Bear with me. Now, here is the media. What they give? They give news. Let's say here, I give you an example of news is earning date news. Okay, just an example. Now, the company here, let's say it is $20. This is before the news. After the news, let's say it is good news. Let's say here we have a gap up. It means good news, and the people, they buy a lot. So let's say the stock goes from 20, it goes to $25. Now, this is not always a sure thing. It's not always no sure thing about the gap up. It's no sure thing. Sometimes you see that the company has good news and the company tomorrow is $20.25. Sometimes it is a good news, but the whole market is doing so bad that the guys, they go and they short the stock, and now it is $17. Although the news are good, but the stock goes down. So the news is not that is most important, because the results could be three. Could be good, gap up, here a gap down. Here the news has done nothing. It means neutral, nothing. Good news, but you see the company and it doesn't do nothing. There is no gap up. I will tell you about another thing, that the majority of the people, when they are thinking about the news, when the news comes, it has already been comprised into the price. For example, you just hear, you begin to read the news. After you read the news, you go to the price, you find the gap up. You find the stock from $20, it goes to $25. I have been following some stocks and following the news. You just begin to read the news and you find the stock has already gone so wide. Now you ask yourself, why is that? Okay? Because there are some people with a high execution. They just read the first thing and they can order in less than a second 10,000 shares or 20,000 shares or 50,000 shares of a stock in 1 second. This, when it goes to the market, it changes the price widely, and other people, they do. So you can't compete these guys who take this information so quick and they have good execution about their brokers, and you are reading the news and they already bought, and the stock, they had already begun a gap up. So you can't compete with them. But here is the deal where I do. Okay, let's see, you say to me, for example, last week or the other week you have a gap up on Twitter. How you do that? I will tell you how I do that. Okay, in order to understand that the trading has nothing to do with the news. It's the reaction of the traders who make the gap up or gap down or the neutral situation. So you ask me, for example, How do you get this gap up in Twitter last time? Okay, I will show you. I give you just an example. Okay. Okay. Let's say Twitter. Okay. It was going up. Okay. And then here we have the gap up. Let's say it is 25. It goes to $33 next day. Here is the earning news. Earning news after the market close, after 4 p.m. Now this is today. This is tomorrow. In the morning, you see $33. So here one day, here is the second day. Now for me, I don't buy after the market close, after 4, I buy here and I will be waiting. This is not what I do. For me, I buy here. I buy long time ago according to my signal. So for me, I buy earlier because I see the stock is doing good. I get a signal, I buy, and then the stock is continuing to go up, and then I have a gap up, so I will be making more money. So for me, what is good for me is I follow the trend. I don't follow the gap up. I follow the trend. And this is why my strategies work, because I follow trends. I am a trend follower. Trend follower. This is what we call swing trading. Okay? I only buy when the stock is moving up. If the stock is going down, I have another strategy, which is training level 13, how to buy from support line. This is another strategy. But this is how is my strategy. So I don't go and listen to the news and then I buy. If here you go at, let's say, 4:50 p.m. and you listen to the news, after you just 1 second, 2 seconds, you just begin to listen, you'll find the stock at $33 or $28 or $30. So the stock has already gap up, and then you have the news. So the news comes late, okay? Comes late. Why? Because the news, when it is the people, the company, okay? Let's say, I give you an example. So the company announces, okay? Company announces. Let's say this announcement is 20 minutes. Okay? So the people will be listening. Whenever they get the good information, either good or bad, they buy. Now for you, the information comes to you late. Because if you listen 20 minutes, the stock was 20, now it is 28. Just in a few seconds, it's 28. Now if you want to buy, you will be too late. Because maybe 28 goes to 26 later. So you will be losing money. Okay? So this is what I want to tell you, that things are so, in the market, things are so quick. With this technology right now, there are some people who can access the market quicker than you. And they have experts about the company, and when they announce, just when they announce, the price is always going up. And some people, they buy millions of shares. Some people who are following this kind of things. So it's a business. It's a business. Now, when it is a business, when you make a lot of money, you find a lot of competition. But I succeeded to get a lot of gap ups. Yes, I have gap downs, yes. But for my account, it doesn't do nothing, these gap downs, because it doesn't take too much from my account because of my risk management. This is why I tell you, when you understand all my strategies, you will have a very solid money management. You will know when to buy, when to sell, and this is the good thing about what I teach. Now, another question about someone is called No Place Like New York City. Thank you very much for coming, man. I see that he is new. Do all stocks gap down or just certain stocks? Okay. Do all stocks gap down or just certain stocks? This is a very good question. To answer you, let's go to the chart. Okay, let's go to the chart and let's go and see. Okay, let's say go to drug, and I see if there is any companies. Okay, so as you can see here, mostly this stock, which is $321, when you see here we have, I think, a gap down. Yes, here you see there is a gap down. Here it shows a gap down also here. A gap up, as you can see. So most of the time, when a stock has gap ups, you should have gap downs also, because it responds well to the news. So it depends. So here, as you can see, there is a gap up, a very strong one. From 171 it goes to 221. Man, it's like $50 $50 in one day, it means, for this company. Here we have a gap down also here. It means that some companies have gap up and gap down. Here you see gap up, then you should see gap down also. Here there is no, here there is a gap down, a gap up here. Okay, gap up, gap down, gap down here, gap down here, gap up here. Okay, as you can see, some let's go, this is drug sector. Let's go to banks, for example. Banking. Okay, here as you can see there is no, here there is a gap up, here there is no, some of them, here gap down. So you should just follow the stock, and I will tell you something, that most of the banking stocks, most of them, they don't have gap up, gap down a lot, especially except when there is a real problem in the bank, if they lose money or there is some stuff happening. Okay, so there are some stocks that they don't have gap ups and gap down, but it is not a rule. Now, if you want me to give you a rule, no place like like New York City, you say do all stocks gap down or just certain stocks. There is no rule for that. But if the stock, try to see the stock who have high volume and popular stocks. Let's say, for example, Apple, Facebook, Amazon, Twitter. There are some stocks that are so famous that the news always make something. So it is just the reaction. Some traders, they like news, and they do risk a lot, because let's say there is earning news and you read the news and you short the stock. What if tomorrow you find a gap up? Okay, so that's why in general most of the day traders they don't hold for the night. They can trade the gap up or gap down in the day, yes, because it's an opportunity, because it is volatile, a lot of volatility in the stocks, and the news, you find stocks for every day if you want to follow this as a day trader. But for me, understand that in my strategies, I don't follow earning news. I know that there is earning news, but I always stay. I take my responsibility and I stay in the troubled day. And you say to me, why? Because many times I get a gap up. That's why I like the taste of a gap up. If you have done this before and you get some gap ups, you will understand what I feel. But one time with the stock called ANAC, ANAC, I think now it is sold, this company. I think I did it last year or the other year. I bought it at 78. Next morning it's 135. Understand that it is a big money for me. It's double my money in one day. That's why I told you that you should either take the risk, or if you don't like the risk to have a gap up or gap down, when you bought before you buy a stock, try to see the earning date, at least the earning dates, because the news can be other thing than earning dates. But most of the companies, the earning dates is very, very important. So it is all up to you what you want to do with either taking the risk or not taking the risk. So Alberts asked the question. He said, I wasn't asking about short selling for Nvidia. Just curious if companies who have skyrocketed in the last couple of years will hurt the most if markets crashes. Alberts, you are asking a question that just the future will tell you. Let's say if this Nvidia or another company, let's say the market is all down and all the stocks are going down. Let's say this company in real it has some problems. You will see that this company will collapse. Okay? So for me, I don't predict what a company will do in 1 year or 2 years or 3 years. I don't know. And no one knows. Even if someone tells you, oh, this company will double in 1 year, it doesn't mean that he knows something. Maybe there is a bad year like 2008. Okay? Who knows that most of the stock market lost 50% of its money? No one knows. Okay? So predicting is, for me, it means nothing. I don't like to predict. I buy and I sell by signal. It means I base all my trading on signals, on price, on something that I see, and then I buy accordingly. I don't buy because of the news or because a guru has said this or that, or because someone sees the future. I don't care about his future because maybe he will die tomorrow. Even if what he says is true, but you know, no one knows what it is tomorrow. For me, I'm looking for today. If I get a signal to buy today, I buy today. I don't leave it for tomorrow and buy it. This is what's the thing I'm following. Thank you, Alberts, for all your questions. Now, Juan de Casa said, are you using TC2000 to screen? Is it good for swing trending? Now, Juan de Casa, TC2000 is the same as, it is the same chart as what we are using. But TC, it is the broker. You can use the chart and you buy and you sell. But you can use my criteria and you can screen from any stock screener. Either it is paid or not paid. Okay? In the chart, I will, Juan de Casa, please stay with us. I will show you right now how to scan, okay? But I will not give you the criteria, okay? If you are my student, okay, you will see that you can send me an email and I will give you more details about the criteria, so if you know the criteria. Okay, so let's go and go to the chart, okay? Now here in the scan, you click scan here, which is on the top right, top left, scan. Create a new scan. Now, here it says scan name. It means put a name of the scan. Let's say it is a test. Now, the only thing that you can scan is list of to scan is a Standard & Poor's 400 mid-cap component stocks. It means this, let's see here, it asks you whenever it is gold, it means you should pay to scan. Okay? So you should go down until you see free. So here it says Dow Jones 50 utility stocks for a free, Dow Jones 20 transportation component free, Dow Jones 30 industrial components free. So these are just few stocks, 15, 20 and 30. Now, Standard & Poor's 400 mid-cap component stocks. These are 400 stocks in mid-cap. It means they are not large companies, but they are mid-cap, that it is free. The problem is that all the others are gold. All the others are gold. Okay, no problem. The problem is not in what you are searching for. The problem is that what is your criteria? He said here, conditions. Add the condition. Now these are the conditions. It means the criteria that you should use. All these criteria. Now, for you, since you don't know the criteria, okay? So the problem is that you can't follow my strategy if you don't know the criteria. So you understand? Is that you should add, okay? You should add a condition. If you don't know the conditions, you can't search in this Standard and Poor's mid-cap compound. Let's say we take this price greater than value. It will ask you price greater than 50. This is the what you call 49.50. So I don't know about this. I have never used that. Okay. So if you find the condition, okay, and you click OK, you get these stocks here on the left side. So it asks you, this is your criteria. Are you buying this stock? This one, this one, this one. Now, these stocks, for me, it is not what I'm looking for. Okay? So this is one criteria. So do you get the idea right now? So do you get the idea? Juan de Casa. If you want to search stocks from the chart, they give you only this 400 mid-caps stocks. All the others, if you want to do search, you should pay. But for us, why we pay $30, for example, and we have a free what we call a free stock screener. It's free. Why should I pay for something that it is free? So you understand? The most important thing, it is not the stock screener. The most important thing is the criteria that you should use. So you understand me? Now, if you follow me, it means in my training, like how to search for stocks, it will be giving you the criteria, and you can try this criteria on any stock, either manually, and you see if it is a buy or not. Okay? So let's drink some coffee, then continue. Now we have James Eatman. Should you day trade or swing trade according to your personality? Yes. Yes, you are right here. James, you are right. Now, it's not only to your personality, but I will, James, I will explain to you more things if you want to do day trading or you do swing trading. Okay? So let's go and I will explain this. I understand that a lot of people, I have done this before, but let's make the distinction between day trading and swing trading. What's the difference? How you can, for example, okay, day trading, how do you make the money? One, because of the fluctuation of the day. Fluctuation of the day, sorry for the handwriting. It means if the stock is 20, it goes to $20.70. So this 70 cents that you are looking for daily, if you can get 50 cents or 30 cents or 20 cents. Now, second, you should be ready in the morning. It means you should be ready. It means you should be free to do the day trading. So are you free? Let's say from 9:30 at least to 12 p.m. So are you free? It means in terms of your job, are you ready to do day trading in the morning? 3, you should you know, there is a rule, there is a restriction. This is called sorry guys. Sorry guys, I was explaining and the connection, I don't know, it stops this software. So are you? It shows me that it is live and is streaming. Is it yes? Can someone answer? I see that it is all good. So it's back. Thank you. Thank you very much. So let's continue. Thank you very much. Thank you. Working good. Thank you very much. So let's continue with this explanation. Okay. Now swing trading. Now here one. Now we follow trends. Trends can be trends. It means when the stock is going to a long trend. It means it could be stock from $20. It can go to $70 or $100 or $200. Now we are following the long. This could be days. It could be weeks. Or it could be months. Okay? So we are looking for the long run. And in terms of money, in swing trading, you follow the trends. It means you follow the whole money in the trend. From 20 to 70, you get all this $50, for example, in 1 month or 2 or 3. So you are getting a lot of money. So here, in the day, you are struggling with this 50 cents. You are speaking about cents here, or sometimes it is $1 or 2 when the market is good. But here you are looking for a lot of money. Now 2, it means you need only little time to search, and then you buy stocks. If your stocks are good, you do nothing. So it is easier for people who have jobs. If you have a job or jobs or you have salary, swing trading is better for you, and you can make a lot of money without the work of the day trading. Day trading, they work a lot because they work with the news, they work with volume. It's a lot of trouble. Okay? And the day can go up, can go down, can go up again. So it's a lot of problems. In swing trading, it is better. You follow trends. If the stock trends, it's good. If it goes down, you sell it and you buy another one, which is so easy. Now, 3, there is no restriction because what? Here I will explain to you. No restriction. Sorry for the handwriting. Okay. So there is no restriction. It means, let's say you buy 3 stocks in 1 week. Most of the time you are not going to sell all these stocks. So this day pattern trader, you are not having problems with, although you have $10,000 or $15,000, you have no problem with this restriction because you buy and you leave. So it takes time, it takes many days. So you are always good with this restriction. But here in day trading, you have a problem. If you do more than 3 trades a week, you want to do a day trade. Each day you do 1 trade. You can't do that. Except when you have $25,000 in your account, you can forget about this restriction. $25,000 in your account. When it's going to 24, they will stop you. So here there is a restriction. That's why I don't like day trading, because of the restrictions. Because now for me, my account is so big, so it's not this 25,000. Okay, and I don't like to wake in the morning. This is the second thing I don't like. And I don't like to follow this 50 cent or 5 cents, or why should I do that? It means, why should I follow cents where here I find dollars? Okay? And believe me, I have put a live trade with 5 months and 2 weeks in my subscription and in my training level 7, how to follow an uptrend. So it means I will show you how to follow the trends, and that's why it is so good. That's why I use swing trading. It's a choice for me. But for you, if you like daily fluctuation, if you are quick in decision, if you have time in the morning, if you have money not to have this restriction, you can do day trading if you like it. Because I don't say day trading is not good. It is good for those who like it. Now for me, I like swing trading. That's what I do. Okay? Thank you very much. Hope I have answered the questions. For James Eatman, thank you very much for all the guys who are new here, like James, and no place like New York City. So I have the free training if you want to take the free training at first. Okay, so you can get that. You can go just to my website and you can get this. And for you guys, for those who want the free training, here are the links, and they are they are always okay. So we have a new hello, Brian Loveless. You come late. Yeah, we have begun earlier this week, and we try to see. Brian Loveless, you say you never replied my email. I don't think so. So can you send me your email again? I think I have replied to you. I will check. But here is my email. Please send me the email right now. I will check it and I will tell you. Here is my email, please, Brian. I might have sent you a reply, but it was inside the email. If not, I will reply right now after I finish this this live session. So please write back to me. If you write, just say what is your question, and I will try to answer you back. Okay. And let's see. Please, if you want the trainings or the free training, please just check it. Okay. James said lots of time I put stop loss and the stock goes down, I lose my shares, then it goes back up. Yes, James Itman, this is just because the fluctuation of the day, sometimes it is so bad. And another reason for your stop loss, sometimes you don't know how to put stop loss. Sometimes you put it too tight, sometimes you put it too large. So that's why you should learn. So James, you can see training level 11 and 12. If you go to my website, check this training. How to day trade using the chart and the candlestick, and training level 11 which is how to sell short a stock. Please, you can go and you can take these 2 training. It will give you a lot of techniques, how to buy, how to sell, okay? And later, if you want to use a stop loss, which is what we call training level 6, how to calculate stop loss, it will help you a lot understand how to put this stop loss, okay? Oh, okay. So Brian Lovelace said, can you explain how to understand when they say 10th of a point? It is 10 cents. It is just because before this is an old way of doing business. Before they don't speak about 1 cent. Before they say quarter, they say half of a point. A point is $1. Okay, so 1 point. It is the old jargon that the people use. It is $1. This is why they say 1 point or so. You find it in books also. So it's very easy. When they say 1 point, it means $1. 10th, it means 1 out of 10. It means 10 cents out of $1. Okay? So this is the thing about it. So for all you guys, you can check my training, all my trainings, or if you want the 10 training from the first one to 10, you can do my golden subscription is better, because it will give you 10 training, and then you can see the lessons, you can see how I search, you can see all the things. Now, as I told you how to invest and trade in IPOs, for me, if this is my own perception of, I don't buy an IPO when it is just coming to the market, because you can buy a company that it is so famous, so nice, but the stock will be going down, like Facebook. It was 42, it goes to 17. So, oh, Artkov, you say, what did the time start today? At 9. Now I change and I send a notification by YouTube. I don't know if all of you guys got it. And Artkov, if you are in my if you ordered a training, I sent a message yesterday or the other day that there is a stop in the thing. I don't know what's the problem. It shows that it is very low, but there is no problem with that. Oh, okay. It says I am live, but it is too bad. So this, I think it's from YouTube, not from my connection. Okay. Oh, working now? It's okay. Sorry, I haven't checked my emails. Oh, yes. Artkov, yesterday, I sent a message to all my subscribers, to all my students who are in Gumroad. If you are in Gumroad, you should have this email. Yes, it is working now. Very good. So always check your email in on Saturdays, like midday or something, to get the notification. Or you can send me an email before and you say when will you do your your live session. Maybe in the future I will change it in the day if some people there are a lot of people on the day, because you know I do just choose a time, but I really don't know. Okay, I really don't know which is the best time for almost everybody. Now, as I explained, okay, for me, IPOs, if I want to trade, I do a day trade on the first day, because it is too volatile and it's very good and you can make money. Now, if I want to what we call to swing trade, I should see like many days or many weeks. Okay, so I because I rely on the signal. I don't buy because the company is good or the financial is good. Now, for investing, I should see the beginning of the trend, and also I do use my techniques to buy the company that I want when I get a signal to buy. Okay, and when I get a signal to buy, I will leave it at least for 1 year or 2 or 3 to see the result. Because in investing, you should not put a stop loss, and you should risk a lot. This is what we call investing. Investing, it is not the people, they think that investing there is less risk. No, investing is the opposite. Thank you, Pasquale. He said highly recommended the golden subscription. Yes, a lot of people, they like golden subscription because it has 10 training at the same time. You can watch all of these. We have the weekly search, and we have lessons that explain details that you will never find online or in books, or the details that are in real market. Okay, that's why some people, they choose golden subscription and they stay until they understand everything. Okay, so as I told you, even if I want to I'm telling you that I bought Costco before, which is a company, which is a retail. I see it, so I did it as an investment. So the stock was like, I think 85, now it's 165 or 180. It's okay. So I double my money in 1 year or 2 or 3. So this is just an investment that has nothing to do with following the trends. So if you want to invest in a company, at least see when the stock is growing into a trend. Don't just go and buy blindly. Okay, I will tell you. Someone at the beginning, he gave me Dropbox. I will show you here. Okay, he will. Dropbox. Try to check this company. He told me, what do you think about Dropbox Inc., which is an IPO for today? Well, it means yesterday, Friday. Now, see, this is only 1 day. Okay, 1 day. The stock has gone from 29, it goes to 31.60, and then it goes down, and then it stops at 28.48. Now, are you going to invest in a stock like this, a company like this? What if this 28, let's change. Okay. Now, let's explain this. This is today, or it means yesterday, which is Friday. Okay, just an example. And we give this example of this stock. This is today. Now, the stock opened at 29. It opens here at $29. Now it goes up to 31.60, then it goes down to 27.84, and then here is the close. The close is 28.48. Okay, so this is the price of today. This is today. Now, how come you take a decision to invest in the first day? How do you know? What if this 28 goes down and it becomes $2? Just an example, okay? What if the stock has been going down to $2? Are you going to, is this investment as you might think? What makes you choose this stock? The choice. What makes you choose this stock to invest in it? Because investing is more than 1 year. More than 1 year. It means you are staying more 1 year. When you stay more 1 year, this is a big risk. A big risk because you don't put stop loss. Big risk because there is no stop loss. You are not thinking to use a stop loss because it is an investing. Investors don't use a stop loss because they think that they should stay longer. They don't see the fluctuation until they make a lot of money. Now, for me, how for me I invest in a company? Let's give you my idea about investing. Now, let's say a stock is here. It opens, it goes up, it goes down, okay? Now, if I see that the company is going into a trend, let's say the stock here is 20, let's say here it is 30, here it is 15. Okay, this is just an example. If the stock was 20 until 15, I will not buy. I will not buy here either. No buy, because no one knows where it might be going up like this and going down more in the future. But if I see that the stock is 30, it was 20, it means that this company is appreciated by people, and investors, they have bought a lot to bring it from 15, it goes to 30. It means there is a big move. It means this company is good. But if I bought it at 30, in 1 year, I should see that this, let's say 30 is here. At least I see that there is 50 or 40 or 60. I see that there is a move. Okay? But if the stock or the company is going from 30 to 20 or to, let's say, to 19, I am beginning to lose a lot in this company. So for me, I don't stay. This is how my investment idea. So I don't go with a downtrend. I don't buy the downtrend. Okay? Except when I see good signal. So this is how I see the investing in this world. No place like New York City. He said, how many years have you been trading stocks? You seem like an expert. First, thank you very much. No place like NC, New York City. I have been trading since 2010. The problem, my other time I was trading myself, I make some money and then I lost almost all my money. This is my beginning. Now, the question that I always ask in order to understand how I become like a professional trader or an expert in swing trading is that I don't find help at that time. Now, my question is very simple. Maybe you have asked the same question. The question, I will put it right away, okay, is why a stock goes up or down. This is my question. It takes me 1 year and to lose almost all my money, in order to understand this. Now, when I understood the answer for this, my account, I have a money from 18K, I took it to 62K in 6 months. This is what I do at the beginning. Okay? So I have all my savings. I took all my 401k, and I have a penalty and I have to pay tax. But when I understood at that time that I understood how the market works, so I took my 401k and I begin to trade. And I specialize in swing trading, which is following trends. This is how I began working and how. Okay, so as I told you, so I have my 401k, so I withdraw my 401k because it was small, because for me, I was an immigrant, so I haven't been in America so long. So then I took all my money and I begin to trade. From 18,000, I bring it to 62,000 6 months. This is my beginning, and then I continue from 2011 to 2018 working on my account and my investment. And this is how I grow my account right now. Okay, so when you understand the simple question, how a stock at that time, I'm not saying I get scammers, but I get some teachers, when they ask them the same question, they don't answer. They don't give me a full answer that I can apply into my trading. Okay? Some people, they rely on indicators. Some people rely, most of the people who trade, they do indicators. For me, I don't. I have used them and I have lost money. And later I discovered that they are small strategies, they are lagging information. You can't use them to predict the market. That's why I just forget about them. That's why right now I don't use them. Wiseman said, Kareem, I get buffering problem off and on when I watch your live chat, but your videos you make rest of the week, so buffering problem. Cable company said my internet works good, so I don't know. Oh no, see, right now here I see it is full green and it is so good. I don't have problems from here. My internet is very powerful and the live is good. It doesn't show that it is bad. So please, you can maybe you can restart your computer and you will see again, maybe. Diego Levisky said, $52 for gold subscription, really worth is the money. Thank you very much, Diego. Thank you very much. $55, yes, it's worth the money, because what you get is nearly around $1,200. But there are some people who like to buy or to order my training because they will watch it forever. That's why some people, they like my golden subscription. Some people, they like to order my training, and everyone is free to choose whatever. But for golden subscription, I give lessons, I give weekly chart. You can ask me questions and I make videos for you. That's why it is good. James Itman said, can you use GE as an example? Yes. GE I have showed, I think last week or the other week in my live chat, in my live session. And when I speak about the 30 stocks, I say GE was the worst because it lost 50%. I will make the chart, you can see. Yes, I have showed this. See here that GE was around here. It was around $32 or $32 in July 2016. Now, GE was an exception to Dow Jones, because almost Dow Jones stocks go up except for this one and some other stocks. You see it's losing too much. Now it is 13. When I have done the video, I think it was $15 something. And I say it lost half. It's losing and it's going down. Now if you compare it with Dow Jones, you see that there is a big difference. You see? You see how good is the Dow Jones, how good it is, and we can see GE, which is doing so bad. Okay, is doing so bad. If you, for example, you put all your money in GE, you are nearly lost more than 50% of your money if you bought here in this area. Okay, so this GE is losing, and GE is one of the oldest company in America, so it's old and it is losing money. I don't know why it is losing money, but mutual funds are selling. That's why it is losing so much money. Thank you very much, James Itman, for bringing me this stock. But I have spoken this 1 week or 2 weeks ago. Oh, what kind of work were you doing? I have been doing, in my country, which it is my own country, I have been doing teaching. I was a teacher of English at the time in a high school. But this is a very old story. And then when I immigrated, I do a lot of jobs. And then I discovered the stock market by curiosity, because for me, I always like companies. I like successful companies. I like those people who make successful companies and investment. For me, before, like everybody else, I thought that when you buy shares of a company, the company will grow and you make money. I don't think at that time that companies can go bankrupt and you lose all your money. Okay? I don't know that, because at that time I have a general knowledge like everybody else. But when I begin to dig into trading and begin to open an account, but the thing is, I was always curious, always learning, and I like risk. Okay, now right now I try to manage risk very well, because if you don't manage risk, you will lose all your money that you make in the past. So you should do that. Trump said, I have to buy it before it goes public. Hot ones, yes. Trump, if your broker is selling stocks before they got public, you can do that, but I think there are restrictions. Let's say they say to you, if you buy, you should not sell after 6 months. Let's say you have made a big money. Let's say you bought it at $20 and the market is good and you have $50. You can't sell. Let's say from 50 it goes to $2 in 6 months. All your money will be going because you don't have the right to sell. So Trump, first, if you want to buy, you should ask your broker and you ask about the rules before making any investment. Understand the rules before. But believe me, Trump, believe me, if you are not having too much money, 500,000, 1 million, 2 million, 5 million, a broker doesn't sell for people who have no money or little money. But if you succeed, hope it is not a scam. Hope it is not a scam. And this company, you should know what is this company, because some companies, they don't go public because they have some problems, or they are not good, or they can't give their financials, what they are making, what they are doing to the public. Sometimes some of these IPOs doesn't go to the stock market. So understand that. You can see Yahoo calendar and you see if these companies are going public or no. But it's very good if you can buy. I hope you have millions of dollars, Trump. If you have millions of dollars, just go and check. Your broker will be happy to sell to you. Now, Wiseman says, sorry Diego, misunderstood your comment. KSM, what is your country? It means where I am from. I am from Algeria. Originally, I am from Algeria, but I am USA citizen right now. North Africa, if you don't know it. Renor Halilaj said, you are strange. Can you explain what is the strange thing you are speaking about, Renor Halilaj? Can you explain? The portfolio? Which portfolio? So please, Renor Halilaj, can you make some sentences in order to understand what you are saying? You are saying you are strange and then you say portfolio. So I don't understand what you mean. Pasquale say, now that the market it is going down, a lot of companies that are in your portfolio hits the stop loss. Not yet. I have 6 or 7 companies. They don't hit my stop loss yet. But I will see if the market is going so bad next week. I will go and short some indexes. And this you can find it, Pasquale, you can find it in training level 18. How to short the whole market. This is just give you an idea about risk, about which ETF you should use, and what kind of indexes you should do. It gives you a lot of stuff. Okay, it gives you a lot of stuff on what to do. So last week I have some stocks, 4 stocks in the search, weekly search. Friday, 3 of them go up. 1 is going up like 10%. Okay, so it doesn't mean that when the whole market is going down, it means that all your stocks will be going down. No. Okay, so this is not true. But if the whole market continue to go down, if you are thinking about the whole market, you can use shorting the stock market at all. It means all of it, like indexes, and you don't sell short stocks. But for me, I just short using ETF. Okay, so this is what I do always when there is a problem. I have done it before. When the market was going down, I short it. So I will show you guys to understand what I am doing. So, okay, here, when we have Dow Jones, okay, let's explain. Okay, when I make here the last day of going up is 26 January on Friday. This is Friday. On Saturday, I make a video explaining. It was just a funny and unexpected topic. I did solutions to correction of the market. I don't know that there is a correction that is coming to the market, but I have a feeling after I see that the market was so good in January and all the analysts, when I just come just like this, I see that they say that 2018 will be an excellent year to invest. I understood that there is a problem. Okay? This is what I do. The whole month, the stock market was pushed so good. Now, I have explained this idea before. So, in order to explain to you this idea, understand that for me, I should see the hidden hands that moves the market. I don't know who are they, but I know that most of them are mutual funds. So let me drink some coffee and then I can explain. I have explained this before, like 2 months ago when the correction has begun, but I will explain to you again now to understand what is the thing that are hidden and the people, they don't see it. Because the crowd, it means all the people who are online, who are trading, who are investing, they get influenced by the media. That's why someone told me, does the media news affect the market? Yes, it affects. I will show you right now after drinking some coffee. You should have some coffee, some tea, or some soda or whatever, and just watch and continue watching me. Let's go to the explanation. Okay. The stock market here in January, this is January. Okay. This is January. The market was going so good. Okay. Now, why the market was going so good? Is mutual fund or the media, let's say let's say the media is better, because you will understand better like this. Now, there are a lot of analysts, and in TVs they say 2018 will be a great year for investing. This is what they say. If you go to the old news, old stuff, this is in January. Okay? Why the analysts say this? Do you think they like to advise people for free? Analysts, they don't work for free. These guys got millions of dollars to say that the market will be good. Now, in real market, what did happen? In real market, when the analysts are saying investing is good for 2018 and they show them stocks or they show them indexes, what the public are doing, the public, it means us, it means everybody who is just watching this analysts, the public. Now, what is their action? Their action was buying heavily. They buy more and more and more. Excuse me. Now, when this public, which is us, it means investors, traders, swing traders, everybody was buying, influenced by what the analysts have been saying. Now, what did happen in the market in real? People are buying because of analysts, and here, what is this thing that's going down? Mutual funds were selling. Mutual fund, when they want to change stocks, okay, they will sell heavily. But since they were going to sell here, selling, they need another action, which is buying. Now you ask me the question, why they don't sell here? For example, here they sell and the stock market goes down in January. Why it goes to February and the stock market collapse? It's just because when you are buying and the other are selling, it doesn't show in the chart. It shows that it is going up because millions of guys are buying. When they stop, these guys buying and the mutual fund have sold all their money here, they sold all their shares, the market has no buyers of the public. It's finished. And the people, they discover that, and the stock market begin to go down. And who will lose? It is the buyers. They lose. They begin to buy here and here and here all the way, and they begin to sell all the way heavily, because the analysts, again, what did they say here? Analysts, they say it might be a bad year. Okay? So here they say it's a good year. Here they say it's a bad year. But it is done because the buyers have already lost a lot of money. So this is the game of the stock market. Analysts are paid, and you say it is a scams. No, it is not a scams. It means it is just their opinion. It is you who scammed yourself. Scammed yourself. So why? Because you can't take a decision by yourself. You ask other people to tell you what to buy, what to sell. And this is the problem of the stock market from its beginning. It's always the same. The market has never changed with those analysts and the public. Always the public are a victim of these analysts, but they are a victim to themselves. Because who asks you to buy? Why you should buy? Because an analyst say to you, buy. You should buy by your selection. It means you yourself select stocks. Don't follow anyone else. You should be independent. And this is why I told you that I don't buy because someone, or because the market is going up, I buy. No, I buy by the signal. I don't care about what the people say. I buy when I see an opportunity in the market, and this is how I make my money. Okay? So I hope this can explain. I have another question from Diego Levisky. What are your thoughts on low-cost index versus managed mutual funds for long-term investing. Now, low cost index, this I have made low cost index. I will show you right now what does it mean. I have explained in videos before. If you want to, you can go to videos on YouTube. I have explained this. So here is the deal. Now what we call low cost index, we mean by this, we mean ETFs. It means the stocks that tracks ETFs, which is exchange traded funds. Sorry for the handwriting. Now, as compared to mutual fund, I will explain what's the difference. Now, low cost index, this, there is no management. No management, what does it mean? It means, okay, the Dow Jones is going up. This is, let's say, the Dow Jones. And the stock or the ETF, the exchange traded funds, that follow or tracks the Dow, this is called tracking, tracks, it's automatic. When the Dow goes up, this ETF go up. So you see the thing? ETF goes up. So this ETF tracks the index, which is the Dow. Because you can't buy the Dow. The Dow is too expensive. It's 24,000 something. But the ETF, it could be just 200 something. I will show you the ETF. The ETF, for example, it's called DIA. This is the ETF that tracks the Dow Jones. Okay? Now, why we say low cost index? Let me explain mutual funds and then we can go. Now, mutual funds, okay? Managers, what they do, they buy and sell also, and sell. So they do transactions in the account. Transactions. Now, when they do transactions, there are fees. There are fees. Most mutual funds, you can find 2% fees, or you can find 3%, or whatever percent. Now, this is cut from the fund index. It is cut from the fund itself. So you are paying money. Although you can check that. You take any mutual fund, anyone. If you have, for example, a 401k, you can take any mutual fund and it will give you the fees, how much you pay. But it is hidden, okay? They show it to you, but they don't go and say, today we take the fees. No, the fees are taken and they don't tell when it is taken, okay? So, but it is taken from the index. Now, what's the difference between low cost? Why we say low cost? Because this is automatic. It is something that tracks. There is no management. There is no selling and buying. It just tracks. And the fees could be 0.45%. That's why the people, they like ETFs. They like ETFs and they don't like mutual funds. But understand, ETFs, there are thousands of ETFs and there are hundreds of mutual funds. Okay? So it depends on you what you want to do. Mutual funds, they go slowly up and slowly down. ETFs, it depends on what index that you are following. So you should do your search, okay, your search when you want to buy these ETFs, and try before you buy, try to read how this ETF works or what it tracks, because some people, they buy an ETF and they don't know what it tracks. What is the asset that it tracks? Okay, so this is a problem. Okay, so sorry for that. Sorry for that. I was explaining and not showing you the thing. Sorry for that. So as you can see, okay, as you can see, the explanation. The low cost index, you have only smaller fees. Please, you can check any ETF and you see how much is the fees. Now when I say 0.45, it's not always, but most of them are under $1. That's why there is no management. It is just automatic. It means if the stock, it's automatic. If the Dow goes up, the ETF goes up. If the Dow goes down, the ETF goes down. Okay? Now, so you don't buy the index. You can't buy the index because it is too expensive. You buy the ETF that tracks it. Mutual funds, it is a combination of stocks. You can find stocks, bonds, you can find options, you can find whatever the manager is putting. But there is buying and selling. Since there is buying and selling, there is management. And they take fees. They take 2% or 3% or whatever, and it is cut from the fund. So this fund, when it is cut, they don't tell you. So it is hidden in the expenses. So my opinion is, if you want to buy an ETF which is very specific, or you buy a mutual fund because this manager is very good and each year he makes a good percentage, you should check the mutual fund history and fees. History, it means, is it making money, yes or no? Because the manager, he has many stocks and the average is the index. So it might be good, it might be bad. So if you see that your money is put in mutual fund, that it is bad, it is always losing money. So if you have 401k, you can sell this and change it to another one, because you do it yourself, because you have the ability to select mutual funds in your 401k. If you don't know this, you should know by now that you can do that. You can do bonds, you can do whatever is 401k gives you as mutual funds. But they don't give you stocks. This is the problem. Okay? Now, someone asks me, why they don't put stocks into the mutual fund? It means they ask you to choose. Okay? They will not ask you to choose because the manager chooses the stocks. You have only the name of the mutual fund and the index it represents. So the manager chooses. So if you trust this manager, you stay with him. If you don't trust him, you sell his fund and you buy another one, because they have many funds. Okay? So the people, they go to low cost because this is more acceptable, because there are thousands of ETFs. Okay, you can choose. Now, some of you guys, let's say you want to, for example, to know where are these ETFs. Okay, I will show you right now from the chart where to find ETFs. Okay, so let's drink some coffee. Okay, let's go. The chart. Now you go here on the top and you click And then you find here ETFs. You see ETF. You click that and you will find, let's say, the ETFs. Okay? All these are ETFs and it represents something. Okay? It represents something, so you should read whatever ETFs you want. And ETFs are different. Some are going up, some are going down. Some depends on where is the market. Okay? But the good thing is, before you buy anything, try to see what is the fees and what is this ETF is tracking. Because last week it happened that someone has bought an ETF that it tripled the profits and it tripled the losses, and he got a gap down in his ETF and he lost 90% of his money. So be careful, not just buy and you don't know what it represents. So hope, Diego, you have a good explanation. And Diego, if you want more questions, please go to any video, you find my email and send me my email, okay? JJ said that I am paying 2 commissions. How is that? I have no idea what you mean. Which broker gives you 2 commissions? No, normally it's only 1 commission. Try to see. You can, JJ, you can send me an email and you can say, ask me questions about these 2 commissions, because only there is 1 commission for the broker, not 2. Oh, you are speaking about buying and selling transactions? Yes. Yes. When you buy, you pay, and when you sell, you pay. Okay? Yes. If it is what you are thinking like this, yes. 2 transactions. Minyapan Mini, how are you? It's a long time I haven't seen you, man. Where have you been? So, sir, while buying ETF, do I need to buy on the same day for all my position? Let's say long ETF from the support line. While buying ETFs, do I need to buy on the same day for all my position? No, it depends on you, what you are doing. Either you buy on the first day or 10th day, or depends on the signal that you get and where you want to buy. Okay? So it's up to you. No one will tell you if you want to buy mini stocks or 1 stock or whatever you want to buy. Let's say a long ETF from the support line. As I told you, I hope Minyapan, you have training level 13, how to buy from the support line. This is not easy a choice. Okay? So let's say you buy mini stocks from this support line that you think it is good to buy. Let's say the next week all your stocks go down. Okay? Or all stocks go up. So no one knows. So when you buy something, just put stop loss and follow your trading techniques. So the best thing is, if you decide to do something, just do it. But in terms of risk, last Friday, it means yesterday, Friday, was too bad. It means 2 weeks bad in the market. You think that maybe it's the support line or whatever, but next week it will show us. So if you are interested to buy, or you have bought, so next week you try to see the result. Are you correct? Yes or no? Because the market will show you if you are correct. If you are correct, from the support line, the stocks will be going up and you will be making money. But what if some stocks or all the stocks go down because the market collapses? Okay? So you will be looking at losses. So it all depends on you and where is your stop loss. Okay, so I can't tell you I can't tell you, for example, if you should buy all or one, or it depends on you and what you think. Okay, but for me, as a principle, I don't buy everything on the same day. I buy stock today, I buy stock the other day, and since I have a portfolio, I am always in the market. So right now I have stop loss. This stop loss doesn't trigger it, so I am still going long with some stocks. Okay, so it doesn't mean that the whole market is going down that my stocks will be going down. It depends. Some they can go down, some they can go up. So you should understand that. Okay, so for investing in IPOs, it means new companies in the market. So you try just to wait. Sometimes you can wait 1 year, 2 years, 3 years until these companies show that they are making money and the trend is going up. Don't buy blindly. There is just someone who showed me Dropbox, and I showed you the example, and we say, what if I invest today? Today the stock has been public, I buy today. But who knows what will happen next week or next month or next year? Who will happen? What if the stock is going down? Are you going to sell, or are you going to hold for 1 year or 2 or 3? What if 2 years or 3 or 4 the stock is still going down and you are losing too much money? What do you do? It means it's all, you should make a plan. This is what I want to do. Make always a plan, and this is for investing. For me, I invest only if I see a trend. I see something that it is a signal. Even if I know the company is good, but I still need to look at the price. So in investing, for me, I should look at 2 things. I look at the price, and I look at the fundamentals of the company or balance sheet. Is this company making money? This is the first thing you see. Earnings, if it has dividend, if the dividend is increasing, if the competition is good, it means this company is making a lot of money and there is no lot of competition. And if the stock is doing good also. But if the stock is doing bad, believe me, I will not invest until I see something good. This is what I always do. Okay? So, where is the... try to see Brian Loveless. Please send me an email. You told me that I don't reply to your email. This is what I remember. So please try to send me an email, and I will try to see. Okay? Until now, I didn't see any email from you, man. So try to send me an email. Okay? Can you, Brian Loveless, can you send me your email? I will check that. Now, I see here another question I didn't see before about JJ. I bought 150 shares of a stock. I put a stop loss. Lose to sell. all the 150 shares, but when it hit my stop loss, it sold 100 shares and then 50 shares. Why my broker did not sell everything at once? Now this is a question. Understand for this JJ that sometimes they don't find in the market the exact shares. So let's say someone is selling, someone is buying 50 shares and someone is buying 100 shares, and you want to sell 150 shares. So 100 goes to this guy and $50 50 shares go to this guy. Okay, so there is no problem with that. And sometimes the price change, and this you should understand. This is just something about matching. This is all about software. The broker has nothing to do with that. But he will make sure all your shares have been sold. This is the main thing. Sometimes he doesn't find shares when the volume is so low. Okay, so I will show you an example. Okay, so just to explain this to JJ. Now you are selling 150 shares. Okay, 150 shares. Now here the buyers, we have number 1, number 2. Someone wants 100 shares to buy, someone wants 50. So you are sending 100 to this one and 50 to this one, and you get 150. Sometimes when you are selling, you have a lot, let's say 5,000 shares. Sometimes the stock is $20, just an example. This is your stop loss. Just to make sure you understand how the stop loss. Now $50, this is the stop loss. You have 5,000 shares, too much. Now when they become the market, you sell by market. It means the stop loss becomes market. You are not going to get $20 for this. Sometimes you can get $19.99 or $19.80. It depends on the volume of this stock. If the volume is millions, most of the time you sell very quick at $20 very quick, because the volume is so high. But when the volume is so low, you can get worse prices. You can sell, for example, 1,000 shares at $20, 2,000 shares at 19, and what is left, $2,000 at 19.80. This all depends. It is automatic. It is automatic, and the broker has nothing to do. Is the exchange and what we call market makers. They do this by software. Okay, it is by software, so it's not they favor someone or not someone. Okay, so as I have explained, this is the explanation. I hope I didn't forget any question from you guys. I thought I have answered all the questions. Please, Brian Loveless, please send me an email, because I just checked my email. You didn't send me another email. Send me an email, and I will be with you shortly when we finish this. Okay, so we are at the end. We are nearly 3 hours right now. So please, if you have more questions, I'm waiting for you. Just 1 minute or two. And then if there is no thing. So the last thing I want to tell you before we finish this is that you look at this, okay? So as I told you, Dow Jones, we have been going up, it stops, then it has been going down, let's say it's red here, and then it stops here, and then it goes up and down, and then right now it's going down, and it nearly touches the support line. If next week, for me, okay, next week, if it crosses and go down for sure, I will short the market. And short the market, if you are interested to know how it works using ETFs, you can check my website, and okay, you can check my my website, and you can go, okay, you can go down. Here are my my training levels. You can go to level 18, and this is the one, how to short the whole market. This is the training that helps you. If the market is going down, you can study it, and if you have questions, please send me questions, okay? And the all these discounts will be deleted, so if you are interested, just order right now before I delete all the discounts that are in ebooks and in videos. Now, if you are interested to start your first free training, you can click this. Training level 1 is totally free. Click to start learning. If you are interested, if you are new to my if you are new to to my training, you can get the first training for free. Okay, so another question. KSM, he said, do you think the Dropbox stock will rebound? I told you that I don't predict anything for stocks without a chart. So you know, you understand how I trade. I don't trade blindly. It means without signal. I just buy and hold. You can do that, but it's not a big deal. I want to have a signal, so I should wait for many days or many weeks or many months until I see a signal according to my strategy, and then I buy. Okay, so if you want to just predict the future of a stock, I am not doing predicting. Now JJ said, that's why I'm asking if the broker is charging me 2 commissions since my stock didn't sell at once. No, JJ, he will not charge you. Most of the time, he will not charge you 2 commissions. Now the problem is that here, I will explain some kind of problem that you might have. Okay, now let's say you have 150 shares. This is what we have. But the problem is that when you put stop loss, you put only 100 shares stop loss, and you forgot the 50. So this 50 will be 1 trade, 1 transaction. Okay? So most of the time I have never seen. I have seen, for example, in my account. I don't know if your account is okay. So you should, normally there is no. If, for example, as you told me, okay, you put selling 150 in your broker, which is a stop loss. Try to make sure that it is 150. This is what you have. Now you will see, let's say 150, but let's say your commission is $5. You see like this, and here you will see 0. So this commission is only once. But if you see two $5, you should call your broker and see that there is a mistake. But I don't think so. I don't think that this is automatic. This is automatic. I don't think that there is a mistake. You can also, when you sell, you see that the price is not the same. Yes. For example, this $20, this $19.98. You can see different prices, yes, because the stock moves down very quick. But to see two commissions, no. There is no two commissions. You should see only one. So call your broker and ask him what's the problem. Okay? And see what's going on. Okay? So JJ, try to, as I told you, to call your broker and see what's going on, because oh no, JJ, for me it has never happened that they charge you two commissions for the same price. No, it's not. Sometimes if he sell only 100, this is called partially filled. This I will just make you sure you understand. Okay? So let's say here, if you have what we call partially filled, what does it mean? It means he sold only 100 shares. 100 only shares. And then you put 50, another 50 by the market by yourself. It's you who have sold this. You will see two transactions. Okay? If you do two selling or two stop loss, or one is a stop loss 150, but it is partially filled. So you should ask your broker what is it correctly, what did happen. And when you know, and then you can take in the future not to do the same mistake. Okay? But in general, the broker doesn't charge you two commissions, except when there is a problem. When it is partially filled, and then he will have another trade to sell 50 at which is not the same thing. Okay? So try to check with that. So thank you very much for watching. We have 3 hours 8 minutes. It was a great session, and hope you have enjoyed the session with a lot of information. If you have more questions, please go to the video on the description. You'll find my email and my website. Send me an email, and hope you enjoy your weekend. Thank you very much. So next week we will see if the market is going into another correction. I will make videos, and then we can discuss this later. Okay? So thank you very much, and see you